So welcome now to my next video. Today we'll be learning about financial ratios. So let's answer a set of questions here hanggang number 20 na nakuha natin sa accountingcoach.com. So number 1, which of the following is not a current asset? The answer here is fixtures. Let's erase this. Let's start over again. Fixtures. So what are fixtures? They are yung mga mga upuan, mga bed that are fixtures, and they are equipment. They are long-term assets. And what is current minus current liabilities? So the answer here is working capital. So what is working capital again? Working capital is the measure of the company to pay its debt. Di ba yun yung parang pag ngayon ba ay may utang yung company, kaya ba niyang bayaran? Yun yung working capital. Yun yung liquidity ng company. So, makuha ng working capital by minusing assets minus liabilities. Current assets minus current liabilities. So, number 3, current assets divided by the current liabilities is the current ratio. So, here in number 2, the two accounts is finding the difference. However, here we divide it. Okay, current ratio. Number 4, the quick ratio excludes inventory. Inventory is not liquid because in the quick ratio here, in the sets of financial statement, quick ratio, its formula is cash plus AR, accounts receivable, divided by current liabilities. However, in current ratio, it is cash plus accounts receivable plus inventory plus prepaid, diba? Ang daming lahat ng current asset andun, divided by current liability. Number 5, the following information shows the following. So the company's working capital, yeah. So we find the current assets of 126 and finding the current liabilities of 60. Yeah. Then we end by 66,000, correct? Number 6, the company's current ratio is, and we divide this to amount, 126 divided by 60, the two current amounts, we end by 2.1. Correct. Let's go. And number 7, the company's quick ratio is, so here we do disregard the inventory and prepaid. So again, cash plus AR equals the quick assets of 40,000 divided by current liabilities of 60,000. We get 0.67,000 by dividing it. And so number 7, 0.7 by rounding up, correct? Number 8 to 11, for its most recent year, company had sales and cost of goods sold of 525, and sales is 830. At the beginning of its year, the accounts receivable was 80 and its accounts receivable was 100 in the end. Okay. Ito yung beginning, ito yung end. So what we do here is we get the average amount. Why? Because in this ratio, there is one income statement account and one balance sheet account. So in the balance sheet account, which is the AR and the inventory, we take the average. So let's compute. What is the inventory turnover ratio? So we divide that. Inventory turnover ratio is finding the COGS. I'm finding my solution. Okay, here. It's finding the COGS of 525 divided by average inventory of 105, we get 5. And so what is the turnover ratio for the year? So we divide this to 365 days in a year, we get 73. What is the accounts receivable turnover ratio? Okay, the formula for that is sales 830 divided by average AR of 83, and 80 plus 86 divided by 2. When we divide that, we get 10. And correct, number 10. Let's put 7.9 and 10. So number 10, on how many days of sale in accounts receivable during the year. So we get the AR receivable turnover ratio divided by 365, we get 36.5 or 37. So what does this mean? Ito yung ibig sabihin na ito yung gano'ng katagal bago makolekta yung utang natin sa mga customer. Diba? So pwede natin ito gamitin sa pagkuha ng pag-implement ng mga credit sales. Halimbawa hanggang 30 days lang tayo pwede kumolekta ng ng mga utang from customers, di ba? Pag lumagpas doon, may penalty na. Ganun, example. So, number 11, on average, how many days on sales were inventory during the year? So, again, we get the inventory turnover ratio and divided by 365. So, we get 73. Okay? So, ano ibig sabihin nito? Ito yung kung gaano katagal on average yung inventory ay nasa warehouse o nasa factory bago pa mabenta. So, pwede itong maging batayan kung napapanis na ba yung inventory natin. Di ba? Masyadong matagal. Yung 73 days, matagal na to ha. Kung yung inventory natin ay pagkain. Di ba? Kasi mabilis mapanis yung pagkain. Okay, now number 12 to number 13, another problem. A company's net income after tax was 400,000. Yan, continue. Interest expense of 140 and interest expense. And ito tax expense of 140 and interest expense of 60. At the beginning of the year, the stockholders' equity was 90 and the end is 210. So what is the times interest earned for the year? For the company. So idea dito is that we get the EBIT. So anong EBIT? It is the earnings before tax. Then after getting this, we divide that from the interest expense and we get 10. And so how do we get the EBIT? First, we get the net income after tax and we add back the tax expense and the interest expense. So we get the gross amount of 600,000. And divided by 60, we get 10. Correct? And number 13, what is the after-tax return of the stockholders' equity? Again, we get the net income, which is the 400,000 divided by equity. What was the total amount of equity? It is 190. And so we get 20,000. And so this is wrong. It's not 190. We should get the average of 190 and 210. So it must be 2 million. Yeah, so 20%, correct? Number 14, let's continue. The debt to equity ratio is computed as total liabilities divided by yan. From the word itself, equity, total equity. So, ito yung measurement natin kung gaano kadelikado ba yung paghiram ng company. Kasi in normal terms, debt is more risky but it has a higher reward for the company. So, medyo balance siya from risk and reward. Number 15, which of the following are likely to have a reported amounts on the balance sheet being close to their current value? The answer here is current assets. Yan. So, example, yung inventory natin is pwede natin siya i-measure sa NPV, net NPV, the net realizable value, the NVR. Yan yung example nito. Current value, not historical value. So, number 16, a corporation's excellent reputations will be listed among the corporation's assets on its balance sheet. No. Bakit? Kasi itong excellent reputation, it is a subjective, subjective amount. Halimbawa, yung Jollibee, yung di ba sikat yung Jollibee sa Pilipinas? So, yung value nun, 1 million, 6 million. Actually, we have no reliable base on its value. However, if we buy that from another company, for example, yung Jollibee, binili yung McDo ng 40,000. Yung 40,000, yun yung parang, ano siya tawag doon, intangible asset. So, we can report that on the asset or on the balance sheet assets, balance sheet assets. But here, we will not report it since it is internally generated. Number 17, the current market value of a corporation is approximately the amount reported on the balance sheet as stockholders' equity. So the answer is false. Bakit? It is book value. Number 18, free cash flow is the cash provided by operating activities minus the cash provided by financing activities. No, it's false because the answer here is investing activities. False. Diba? False tama. Investing activities. Ano pa yung mga financing activities? Ito yung pag humihiram tayo ng note sa bangko. Nagbabayad tayo mga long-term debt or issuance of equity. Yung naman, yung investing activities, ito yung pag-purchase ng long-term equipment, diba, pagbenta nun. Let's continue. The quality of a company's earnings are suspect when a company's net income is more than the cash flow from which activities. The answer is operating. And last number 20. The balance sheet, which reports percentage of total assets instead of dollar amounts, is referred to as the common size balance sheet. So what is the common size balance sheet? So it is a vertical analysis where we get the denominator, which is the total assets, divided by a corresponding account. For example, here we get, let's maximize this, and we get the common size balance sheet here. So cash represents 3% of the total assets, diba? And goodwill represents the 3.6% of the total assets. This applies to liabilities. Yan. Yung interest payable, 4% lang siya sa total assets. And so we divide only that. Dali lang siya makuha. 210 divided by 770. Yan. See, 550. 55 divided by 77. Yan. So it also applies to income statement. Na yung denominator naman ay yung revenue, yun yung 100%. Okay? Common size income statement. So what is the other counterpart of the common size? It is the comparative or the horizontal analysis where we compare the previous year to the year now. If it was improved or it has decrease or increase. So we get that, diba, by getting the difference of both years and dividing it to the base year. So this ends our video. So before that, have I missed any financial ratios? I think none. So I think this ends our video here, and God bless everyone. Stay tuned.